Capital finance generally refers to the process of raising funds or capital for investment in business activities, projects, or assets. It involves obtaining financial resources to support business operations, expansion, acquisitions, or other initiatives. Definition: GAAP doesn't explicitly define capital in the same way it's defined in IFRS. However, the concept of capital is implicitly understood within GAAP as the combination of equity and liabilities. Equity represents the ownership interest in the company, while liabilities represent the obligations the company owes to creditors. IFRS defines capital more explicitly as the amounts invested in an entity by its owners and the accumulated profit or loss for a period. In IFRS, capital is often synonymous with equity, which represents the residual interest in the assets of the entity after deducting liabilities. Reporting GAAP equity is presented as a separate section on the balance sheet, often including common stock, additional paid-in capital, retained earnings, and other components. IFRS equity is also presented separately on the statement of financial position, including components such as share capital, reserves, and retained earnings. Measurement GAAP allows for various measurement bases for assets and liabilities, including historical cost, fair value, and amortized cost. The choice of measurement bases can impact the reported amounts of assets, liabilities, and equity. IFRS also allows for different measurement bases, but fair value measurement is generally more prevalent compared to GAAP. Components GAAP typically include common stock, additional paid-in capital, retained earnings, and sometimes other comprehensive income. Additional disclosures may be required to provide further details about equity transactions and changes. IFRS can include share capital, share premium, retained earnings, other reserves, and non-controlling interests. IFRS may require additional disclosures to explain the nature and purpose of each equity component.